Welcome to the Nate Gratian Show, where we talk personal finance, investing, and entrepreneurship. Thank you for joining me here today. I'm excited to discuss this episode. Even though it may seem a little boring, the topic may seem boring, it is important that we know what we're doing. We're going to discuss all things insurance, what we need to insure, why we insure things, and when we should have insurance and when we shouldn't have insurance. Before we get into it, did you guys know we have a YouTube channel? These podcast episodes go up on YouTube. They're not a video file, they are still just audio, but on YouTube I also do YouTube Shorts. And so throughout the week there's 1 minute video clips that I share what's going on in the market, different investing tips, things like that. And so you get those as well as the podcast episodes. So if you haven't checked out our YouTube channel, jump over there. Just search Nate Gratian or the Nate Gratian Show, and you should find it. And you'll find our shorts, and they're all in different portfolios. They're all in different playlists and such, and you'll be able to connect with me there. We're just getting started on this, so if you want to subscribe, I'd really appreciate that. But let's dig into today's topic. So, firstly, what is insurance? Insurance is there to cover something that you can't afford to cover yourself. It insures it. It's something you pay for. Your emergency fund, you don't pay for it, but that would be a kind of insurance. It's a bit of buffer between you and if an emergency happens, you can just take care of it. And so insurance is there to cover things that you couldn't afford to cover. And so this helps us then go into the second part of when should we insure things? Well, if you can't afford to replace it, you should get the insurance. You should not insure things, however, such as things that you buy at electronic stores. In Australia, that would be something like a place like Harvey Norman or something like that. In the US, it would be a place like Best Buy, where you buy a TV, for example, and they say, do you want the extra warranty on it? Do you want the insurance on it, essentially? Really, if you can't afford to replace that, you probably shouldn't be buying it. The emergency fund is there, and those kinds of things you don't need to be insuring. You don't need to be paying that extra money for the insurance. Believe it or not, that's where the store actually makes their money, is on those kinds of plans. And so you should be able to cover the cost of replacing it. Is it nice to have to replace it if something happens? No, it's not nice, but the extended warranty, you have a certain amount of warranty that comes with it, but I wouldn't be purchasing the extended warranty on that stuff. And so insurance, let's go back to the question. Insurance covers things that you can't afford to replace. So what should you be purchasing it on? Well, it's things like, usually there's four big things, sorry. Usually it is it's your car, your house, and maybe your contents in the house, your health insurance, a medical cover if you need a major surgery, and life insurance. And eventually you may not need life insurance. You may be able, or car insurance. You probably wouldn't keep the car and house insurance because they're such big things to have to replace. But they're the four things that you really do need to have insurance on. If your car is kind of an older car and it's not necessarily worth too much, in Australia here, you may look at third-party insurance, just covering any damages you do to another vehicle should you hit it, versus comprehensive, which covers third-party and your own vehicle and all of that. So depending on the vehicle, you look at that. Next is your house. You should have house insurance, homeowners insurance, and contents insurance, and all of that. Those are things that not too many people can just afford to replace. And then our health insurance. Now, health insurance, look around here in Australia, we have AHM, Bupa, NIB, Qantas does health insurance through NIB, and shop around a bit. it's worth continuing to shop around every few years around the financial year, check it out, see what prices are going for, and look at maybe changing, etc., to a different one. But having health, and in Australia extras, which is your dental and things like that, that's good. In the US, a lot of times health insurance comes with a job or things or something like that. It comes with where you work as some sort of package. But health insurance is important because the medical bills can stack up, and it can rack up very quickly if you don't have health insurance, and it can crack and scramble your nest egg very quickly, and cause you to eat into your savings quite quickly. So health insurance is important. I know it's frustrating when it feels like you're just paying this monthly bill or fortnightly bill, and you're not using it much, but it is important to have. And then the final one that I want to talk a little bit more about is life insurance. You don't need life insurance all the time. Life insurance is important if somebody or a family is dependent on your income, and is dependent on your income to continue operating, to continue living. If your family is not dependent on your income, or you're not married or anything or you don't have children, you really don't need to worry about life insurance. But it's not as expensive as what people think. So if you're single, or you have no children, and there's no one that's going to miss your income essentially should you pass away, have enough money in the bank account to do the funeral and stuff, this is a kind of a difficult topic to talk about, but that's the brutal truth, then you don't need life insurance. But if somebody's dependent on your income, then you do need life insurance. For example, both Chelsea and I have life insurance. I'm not necessarily dependent on Chelsea's income, but she spends a lot of time taking care of Vesta and our little one, and if something were to happen to Chelsea, then I'll need to just take some time off and go sit on a mountaintop, as I tell people, for 6 months somewhere with our children, and go there. And so that's that's what I would do, and then have the money to be able to pay someone to come and take care of Vesta while I'm at work, or something like that. Organize something like that. How much should you have in? And then we have insurance for me, obviously, that will take care of Chelsea and Vesta. How much should you have? You should have at least 10 to 12 times your income. 10 to 12 times your income. What that means is you can take the money that you get from the insurance, invest it, an average 10 to 12%. If you follow the investing stuff that I recommend, you'll get that average 10 to 12%, and you replace the income that you lost. You replace that income, and you're able to then continue as though that income's coming in. And it takes away a lot of stress. It takes away a lot of the stress that comes through the grieving process. Now, I mentioned there may come a time that you don't need life insurance. Look, if fast forward 20, 30 years down the road, if your house is paid off and you've got a few million in investments, and you maybe have a couple investment properties, and your net worth is $3-5 million, yeah, you probably don't need life insurance. You'll probably be okay. But if you're not paying too much for it, then you could just keep it for that extra safety. Where I do recommend to go to for life insurance, in Australia anyways, in Australia is Noble Oaks. There's a company in the US called Xander Insurance. They're really good. They'll help you find a good quote on things. But Noble Oaks here in Australia, to give you an idea, if you're looking probably around $1 million, if you're in your 30s and healthy, probably looking at about $45 a month Australian to get $1 million coverage, and it just adds that extra safety, that extra piece in this journey knowing that everything will be okay should something happen. And so Noble Oaks is really good. Been with them for quite a while, and good company. And so that's what I recommend for life insurance. And if you don't have life insurance and you do have children, or you do have family, then you should go out and get life insurance today. Stop this podcast episode and go get life insurance, or start pulling it up online and just search Noble Oaks, and it's really good. And then you'll have that covered, and nobody likes to think something will happen, but unfortunately things do. Thanks for listening today. Thanks for joining in on this episode with me today. If you like the episodes, be sure to like them or share them, or however, whatever you may be listening on, however you're able to do that. If you're able to leave some feedback or a review on Apple Podcast or Google or Spotify, leave a review. I'd love that. It helps the algorithm. If you want to come over to YouTube and check out some of the videos there, if you're able to like and subscribe and stuff and comment, that all helps the algorithm there. I really appreciate it. If you're looking for more episodes, you can find more on all those platforms. If you have a question or a topic you'd like discussed, send me a message on my website, ngration.com, or on Instagram @NateGration. I hope you have a great day. We'll see you in the next episode.